Hello Sector Watchers, welcome to the show. This is the 163rd episode of Sector Spotlight for Tuesday the 14th of February, the Valentine edition. As usually, I'm recording it on Monday prior, so the 13th in this case. My name is Julius de Kempenaer and I am presenting to you from Amsterdam in the Netherlands. I'm going to keep this intro very short as I ran out of time while recording the show. In this episode of Sector Spotlight, we'll be looking at asset class and sector rotation, and we're going to give some love, pun intended, to the technology sector and show you a quick drill down into industries and individual stocks. So there's no time to lose. Ladies and gentlemen, please enjoy this week's episode of Sector Spotlight. Good, let's grab this bull by the horns and start at the top with asset classes. You have both RRGs here, the weekly on the left, the daily on the right, and you can immediately see that they are pretty distorted by the move of Bitcoin. So here on the weekly you have Bitcoin with that long blue tail, insight improving and rapidly pushing towards the leading quadrant, so that is a good sign. But on the other hand, we have Bitcoin on the daily chart, which has rotated from leading into weakening, and it's now heading towards lagging. The good news is that it's at a very high RS ratio reading. Now, these tails are very clearly contradicting in opposite rotation. So the weekly looks pretty good, but the daily is going through a correction. The fact that the daily is still at that high level gives good hope. There is enough room for this tail to slow down and pick up momentum and rotate back up towards the leading quadrant before hitting lagging. I would actually wait until that happens. This is a bit of, you can see how disconnected the Bitcoin rotation is from the center of the chart and the other asset classes that we have in this universe. So for Bitcoin in general, crypto in general, we are improving. We're out of that really weak spot for crypto, but we are now in, let's say, the first corrective move. And this is where things are getting more interesting, because if Bitcoin manages to actually hold and rotate back up, then we can see the next relative leg up, which is obviously more reliable than the turnaround that we had here. And that could actually drag that whole weekly thing around. So things for cryptos continue to improve, I need to say. But at the moment, I would hold my horses and wait if this tail for Bitcoin actually levels off and starts to curl back up. In order to get a better handle on the other asset classes, I'm gonna take Bitcoin off, at least the tail. I'm gonna put off and fit the chart back so we get better visibility for the other asset classes. And I want to concentrate here on 2-3 things. So here is the US dollar index. It was in lagging and it's now starting to pick up. But you can see that the improvement is really underway on the daily, and that's interesting because here we have a weekly that is starting to pick up, and you see a rapid improvement on the daily RRG. So we're going to look at that chart because I think that's an interesting move. Then on the fixed income versus equity versus stock rotation, there is an interesting rotation going on. If you look at the weekly, then you can see opposite rotations for SPY versus GOV. What I want to point out here is the slowdown on the tail. If you look at GOV and on SPY, it's kind of similar, but the fact that it's yellow is harder to read. But you can see that the distances, and we call that RRG velocity, is slowing down. The distance between the nodes is getting smaller, so that move is losing strength. If you look at corporate bonds, they have already rolled over. They're inside leading, but they're rolled over. And high yield's actually already picking up. And that's interesting because high yield actually has the highest correlation with the S&P 500. And then we've got corporate bonds, and then we have gold. I actually wrote an article about that last weekend, which also touches on how you can use correlation between those asset classes to see or to interpret the moves that you see on an RRG. If we bring that to the daily, then we see that SPY is on the right-hand side, which is good. It's still on the right-hand side on the weekly, but it's at the wrong direction. So the big question is whether SPY will manage to actually curl back up before hitting lagging. And if you talk about the stock-bond relationship, then you should actually draw an imaginary vertical line. And when gold crosses over to the right of SPY, it doesn't really matter whether that is exactly in the middle and 100 on the RS ratio scale. If gold crosses right of SPY, then the trend has turned, the initial trend has turned. Same for when SPY obviously crosses to the left in gold. So that's the big move that I'm keeping an eye on. So it's very possible that SPY just crosses over into lagging, starts to pick up and rotates back up, and gold rotates there. If gold remains left of SPY, then we still have a preference for SPY. Now here on the daily, that situation is clearly there. That move has happened quite some time ago. You can see here that happened. So here is SPY crossing over. Let me see, so where is gold? Gold's here, and that blue one is SPY. So you can see that right here. That's almost exactly at 100. That is not entirely necessary, but here you see the rotation, you see the move changing, and you see SPY moving into the leading quadrant, starting to beat bonds. On the daily, it's also beating high yield and corporate bonds. If we move to the individual charts, and I've lined them up here in order to actually build my story. So the first one is the one for US dollar, because that is powering into improving on the daily, and it's picking up on the weekly. So if we look at that chart, this is the US dollar index. This is the US dollar against a basket of currencies. And we looked at this chart very often, and we said that this was a very important level. We broke that. This was sort of a point of last resort. At 101, that was a point of last resort. And then we got that dip, and all of a sudden a sharp snap upward. So it looks on this index as if we sort of were saved by the bell. If I translate that to the euro-dollar chart, which is the most heavily traded currency pair in the world, then you can see that here also, this was the level that was on that monthly chart, which was super important, and we penetrated that. Problem is that it is a very long-term move, a very long-term level. So, you know, the longer those levels are in play, the rougher they get, so to say. So we are sort of overshooting, and we touched here at 110. And again, that is sort of the level of the last resort. And what you see here is that we're now coming off that high. We're dropping out of this, just below this trend line. And there is, it's not a super negative divergence, but I'd say those two highs here at the same level in the RSI, while in the price they're definitely higher. So it's sort of a semi-divergence. It would be neater if it was really pointing down. That's not the case. If you look at the daily, then it shows a little bit better how it is dropping out of that trend channel, and we're now challenging that support, which is around 106.70. So the first signs of weakness in euro dollar, which is strength for the US dollar, are starting to come in. We need to keep an eye in coming weeks to see how that pans out, but this could very well be the test of resistance and a new longer term down leg starting in euro dollar, pointing to a new period of strength for the euro dollar, for the US dollar. So weakness in the euro, strength in the US dollar. If we immediately move to the cryptocurrency counterpart, and I'm using Bitcoin a bit as a proxy for crypto in general, then you can see how it was coming out of that doldrum, out of that weak trend here. and that happened at the start of the year. We did not quite reach the overhead resistance around 25k, stopped at 24.2, and we're now resting at that previous high, and that's better visible on the daily chart. You can see how we just stopped shy of that overhead resistance, just below 25, and we're now resting above 21.5, which is the previous resistance level, now acting as support. This is an important level. In general, I think that the longer term trend for Bitcoin has definitely changed and turned around. Are we in a full-fledged new bull market? Probably too early. If we are going to hold above 21.5k, that would be a very good first sign. That would be a very good sign for further strength in Bitcoin, especially if we can take out these previous highs and beat that former resistance level. So keep an eye on that for Bitcoin and crypto in general. If we move to stocks, obviously very interesting. You can see that the picture for SPY continues to improve. We had an insight week last week, and today actually market closed 2 hours ago. It started off well, and we're holding up above that 408 level, 408, 410. That range is very important for SPY. And so far we're holding up there. So that is a good sign. We're sort of definitely above that falling trend line. So I'm actually looking for a further move to 418. And if we can take that out, it'll be 428, 430 that we're facing with SPY. And look at the daily chart. It's a little bit more granular, gives a little bit better perspective. And what you see here, it looks like a flag. And I know that a ton of people will actually label it as a flag. I'm not in that camp. It's definitely a nice correction in the form of a flag, but a flag requires a very steep prior rise. That's why it's called a flag. You've got a flagpole and a little correction, that's the flag, and when it breaks out, you have a continuation of that trend. I don't think that this is a really nice steep flagpole that makes this qualify as a trend. Is it a nice pullback correction? Yes, very much so. And it is actually holding around the level of these previous highs that are now acting as support. And you can see that the last bar here, that's today's trading, actually bouncing nicely off that falling support and now pushing against falling resistance. If we're out of that little consolidation pattern, that's definitely a good sign for SPY, and it opens up the way to as I said, 428, 430, that area. If we compare that with IEF, then that's a different story. They used to go hand in hand for a long time, and what you see here is that IEF didn't actually manage to break back, and you see that little dotted line here. I've sort of penciled that in because this is something that maybe a ton of people will label as a rising wedge, which would be a negative sign for IEF. But the problem is, or my problem is, that this lower trend line here only touches 2 points. And a trend line has a minimum of three sequential lows or highs. Drawing a trend line that just connects 2 dots diagonal. On a horizontal level is a different story, but on a diagonal angle trend line that only touches 2 dots, two peaks or 2 lows, is useless. Doesn't make any sense. Everybody can draw a trend line anywhere. If you have 3 or more highs or lows lining up, then things starts to make sense. I've penciled it in. Higher highs, higher lows. We can see what happens here. Nevertheless, the picture for SPY, even just on this chart here, looks better than for IEF, and it actually is confirmed very much so when we jump to the SPY IEF ratio, and we talked about that very often, and we talked about that range in which it was, and we saw SPY engulfed, basically dancing around the center of that chart. And now we see a very clear break out of that narrowing triangle-like move. But what I really like much better is the break above that, the upper boundary of that range. And again, that seems to be holding up right now. We managed there last week, and today is a good day for this ratio in favor of SPY. So I'm going to say if we can hold this level at Friday's close, because this is a weekly chart, then we're certainly on the way for a new period of outperformance for stocks over bonds. Things look good on that front. Moving on to sector rotation. The weekly RRG on the left, and when we spoke last week, I told you it was interesting to see that there was no sector inside leading and no sector inside lagging. That has changed now. The utility sector, XLU, has rotated and has now found its way back into the lagging quadrant, basically confirming the weakness that was underway for a couple of weeks already. There is still no sector inside leading, underscoring the narrative, the observation that there is a real shift in sector rotation going on. The first one that looks to be reaching the leading quadrant is communication services, XLC, which is here still at a pretty long tail, indicating that there is still a lot of power behind this move, and very close to crossing over into leading at really high momentum levels. So that's good news for communication services. If you look further, then we have consumer discretionary, probably the second, maybe the third longest tail, so still good momentum behind it. And technology, which is the blue one that's here just underneath the red utilities tail, moving towards the leading quadrant. So we've got especially consumer discretionary and technology moving at a positive RRG heading towards the leading quadrant. I like that because these are heavyweight sectors, and when they start to outperform the benchmark, that is usually good news. And you can see that whole cluster here of all the other sectors which are to the right hand side of the RS ratio scale, so above 100, which is good. But they're going through corrections, and if you look at staples and healthcare, they're actually coming pretty close to crossing over. Energy is the first sector that starts to pick up momentum here and seems to be managing a new lag upward in that relative trend. If we look at the daily variant, the daily RRG, then we can see that healthcare, staples, utilities here are to the left, far to the left. They're picking up, they're kind of improving, but given the weakness of these tails, I'm not going to hold my breath to see whether healthcare and staples can manage it all the way back to the leading quadrant in the next couple of weeks. These tails are simply too weak for that. The good news is that technology and discretionary and communication services are way to the right. They've got the highest readings on the RS ratio scale, so they're confirming the strength that we have here. All three are going to a little bit of a pause, I would say. And it's going to be very important to see and to watch whether these tails can indeed, as expected, curl back up and push these weekly tails over to the right-hand side. That will be the real confirmation. When we break down the universe of sectors into those three groups, offense, defense, and sensitive, then, and I've done that here. So here is the offensive cyclical group. And you see there's a bit of a mixed picture. You got financials and materials, real estate, and here's consumer discretionary. Real estate leveling off, already losing momentum. Financials and materials on the right-hand side, which is a good sign, but they're at a negative RRG heading. So it's still a little bit weak. Mixed is a better word. They're not in sync, all of them. If you look at sensitive, kind of the similar pattern, similar image. Consumer communication services and technology on the way to the leading quadrant, so that is good. We've got industrials at a negative heading, and energy is just starting to pick up. But look at this. Here is the defensive rotation. All three rotating sharply over the last few weeks and now moving towards that lower left-hand corner. So despite the fact that we still not have a broadly based, a broadly carried outperformance in cyclical offensive and maybe sensitive sectors, the fact that apparently investors are losing and unloading defensive stocks should be considered to be a good sign and something positive that's happening under the hood. Quickly moving to some individual charts. I'm not going to do all of them, but here is communication services. You see that nice move out of there, completing that bottom formation. Relative strength needs a little bit of a breather, so does price. But all in all, this downtrend is gone and we're on the way up with communication services. Here is technology, holding up very well above its previous high. You see that relative strength is coming back up again, and you see that the RRG lines are now nicely pointing higher, almost pushing technology into that leading quadrant. We go to consumer discretionary. They're a bit further away. They're a little bit behind technology, but the break-in trend here is absolutely visible, and you can see that we're off to a good start of the week. The first day of this weekly bar is positive. If we hold above 148 in XLY, I'm going to take that as a good sign, and then there's all the way upside to 165 roughly, and you can see that relative strength is trying to break above its previous support that started to act as resistance, pushing the RRG lines higher. Utilities is now definitely put in a new lower high and pointing lower as well in price as in relative, so that is a negative sign for utilities, completely confirming that weak tail there. And something similar is happening with consumer staples. Although they had a good first day of the week, they're still struggling to break lower. So here that's 73.80, 73.75 is the level that I'm watching here. But that relative strength line broke the trend line here and it's pushing the RRG lines lower. So from a sector perspective, I think that the fact that the defensive sectors are rotating to weakness is the most important sign that we have at the moment. For the last 4 to 5 minutes, I want to do a really quick drill down from sectors to industry group to individual stocks. Let's see if we can make it. The way I do that, start at the sector summary. If you go to the sector summary page, and we already know, we saw how technology was improving. It's in the improving quadrant and moving towards the leading quadrant. Where should we be inside technology? On the technology sector line, there is this RRG icon. If you click the RRG icon, a new RRG will open up, which shows you the industry groups that make up the technology sector. And we can do a really quick analysis here. And by the way, I have added XLK, which is the sector, so you can see the groups versus the S&P 500, and you can see them against the technology sector itself, because I call this a double benchmark RRG, because you got the S&P, which is in the middle, and you got XLK, which is kind of a moving benchmark. But what you need to do is draw an imaginary crosshair with XLK as the center, and you can see how these groups are behaving against their sector index. DJUSSW, US software, is the sector that I think is doing really well against XLK. It's if you look at it, it's inside the improving quadrant against XLK, it's inside the improving quadrant against the S&P 500. It's at a nice RRG heading, moving towards leading. So we want to look at all the individual stocks inside that industry group, that software index group. Now, how do we do that? If you go to the workbench, to the scan workbench, we need a very simple scan. And what we want to do is qualify the stocks need to be inside the S&P 500 and they need to be in the group called software. And if I run that scan, I will get 25 stocks that fulfill, they're in technology and they're in software. So that's what I need. Now, I can then save those stocks to a chart list, and I've already done that. And I've got a chart list called XLK software. This is the way I organize my chart list. 06 is the sector, and then 10 is XLK, and then the hashtag is that it's a group in there, so XLK software. We can then go to view as RRG, and we view it as an RRG. And what I've done here is I have manually added the software index. So if you wish, you can call this a triple benchmark RRG, because we've got the S&P 500, which is smack in the middle here. We've got XLK still inside the improving quadrant, and I have added the software index. As you can see, it's still at the same position versus XLK and versus the S&P 500, but now we also have the individual stocks on this benchmark. So here now I want to draw an imaginary crosshair through the software index, and then we can see what happens. What we can also do is, instead of drawing the imaginary crosshairs, and now it's becoming interesting, because if you look, for example, at a stock like Microsoft, and that's obviously the biggest stock inside this group, and obviously it looks good versus the S&P 500 because the group looks good and Microsoft looks good. If you put it against XLK, then you can see that Microsoft is actually inside the leading quadrant against XLK. So that is good. If we change SPX to XLK, now XLK becomes the center of the chart. Look where Microsoft is. See what I see? It has only a very short tail left. So the strength against the group, so against the sector, is a lot less than the strength of Microsoft against the S&P 500. What about if we put it against the JUSSW, against the industry group? Wow, look at that. Now all of a sudden Microsoft is rotating into the lagging quadrant. So this group, which is driving the sector, which is driving the industry group, when you put it against the software index, it has just rotated into negative territory. That doesn't make it a bad stock. It is moving higher against the S&P 500. It is moving higher against the technology sector. But inside this group, there are other stocks that are probably worth looking at. And that's my point. Microsoft has run its course against the industry group, and now others are taking over. And you can do that, you can find them by looking at this RRG against the software index. And then the ones that spring to mind here, look at CRM, GPN, FTNT, really nice, but also here, FISV inside the weakening quadrant and starting to curl back up. And I had a few more prepared. There is no more time, but if you look at FISV, you can see how relative strength is improving, and it's now also breaking out. So this one is starting a new up leg in an already rising trend. And that's how you drill down from sectors to groups to individual stocks. Ladies and gentlemen, thank you for watching. I hope you enjoyed the show. Please remember, Sector Spotlight airs every Tuesday from 10:30 to 11 a.m. Eastern on StockCharts television. Looking forward to seeing you again next week for a new episode of Sector Spotlight. Same time, same place.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.